U.S. market activity is seasonally weak ahead of the holiday period for July 4th celebrations. Indian activity is very quiet, and there is little of any demand for better quality stones. Liquidity is tight, and the Hong Kong show did nothing to boost confidence as trading there was restrained. Now, while current activity is in the doldrums and could be for the foreseeable future, looking at the long term, A.T. Kearney seems tremendous growth potential in key emerging marketplaces if planned right. The consulting group published its first Retail Development Index this week and ranked the top 30 emerging markets for their online retail potential and named the top 10 nations for e-commerce success using the group's Global Retail Development Index. The Middle East and Latin American regions dominated the list, but just to focus on the very top-tier markets, China came in at number 1, Brazil number 2, Chile number 3, and Uruguay number 4. But the group's e-commerce index rank was just slightly different. China and Brazil were the top 2 leaders. Russia was number 3 and Chile number 4. The index measured factors such as an active online user base and consumer willingness to buy, country infrastructure, and commerce rules and regulations. Russia came out with a high score due to its large online user base of 60 million and a significant online retail market in place with roughly 15 million shoppers. Russians also browse the internet regularly using their phones. These market dynamics translate into a current online annual retail market size of $9 billion, but expected to grow 12% a year over the next 5. There are issues to overcome. However, Russians typically shop with cash, not credit, and it takes time to build brand trust with consumers since there are poorly defined consumer protection laws. Brazil's online market potential represents $11 billion in retail sales, the largest in Latin America. Brazil's online market is predicted to expand by 12% a year over the next 5 as online shopping becomes more mainstream across most retail categories. Right now, appliances and consumer electronics are the products most commonly sold online, with apparel sales weaker since fashion-savvy consumers prefer that social experience of in-store shopping. While infrastructure challenges impact China for internet access and product shipping, its vast online retail market of 513 million users and 164 million active shoppers drives the country's market size of $23 billion. A.T. Kearney predicted e-commerce growth of 29% annually as the infrastructure and online purchasing behaviors evolve. While many retail sectors are popular among Chinese shoppers, consumer electronics and apparel are the 2 biggest categories. A.T. Kearney advises brands that before entering these marketplaces online, they must have a solid customized value proposition in place and adjust websites, payment methods, shipping options, and business models to the local market expectations. Secondly, brands must manage the customer experience online to the local level and be transparent with shipping timelines. Third, never underestimate local players, as those retailers already know the audience and focus best practices to those needs. Finally, think long-term investment when developing these markets and learn from the experience while continuing to build a reputable brand with local consumers. Time now to check on how precious metals prices performed this past week. For all the latest industry news, be sure to check diamonds.net and follow us on Facebook and Twitter.